The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific financial advice. Before making any financial investment, always seek out the services of a professional financial advisor. And now, on with the episode. On today's podcast, we sit down with David Schulhof, the brilliant mind behind the revolutionary music ETF called MUSQ. David, who combines his expertise in music and finance, shares how he's opening up the music industry to investors of all sizes. We dive deep into his outlook on the impact of AI, the future growth of the industry, and why investing in music is the next big opportunity you don't want to miss. If you've ever wanted to know where the future of music and finance intersect, this episode is for you. Insiders, are you ready? Welcome to MUBUTV's Music Business Insider Podcast, where our mission is to educate, empower, and engage artists and music business professionals who are dedicated to having a successful career in the new music industry. Here are your hosts, Ritch, Esra, and Eric Knight.
Welcome back, Insiders, to another episode of the Music Business Insider Podcast, where our mission is to educate, empower, and engage your music career. On today's episode, we have a very special guest, David Schulhof. David has a unique background in both music and finance, and he's the mind behind an innovative music exchange traded fund called MUSQ. We dive deep into how MUSQ is revolutionizing the way investors, from retail to pension funds, can invest in music companies. David breaks down the fund's focus on 5 key revenue models: streaming, content and distribution, live events and ticketing, equipment and technology, and satellite and radio. We also discuss the biggest risks and opportunities facing the music industry today, including the impact of AI and proposed legislations like the No Fakes Act and the No AI Fraud Act. David shares his optimism for the future of the music industry, as well as his insights on industry transformation, innovation, and investment strategies. Trust us, you don't want to miss this one. Welcome back, Insiders. Today's featured guest is David Schulhof, the mind behind the ETF, which stands for Exchange Traded Fund, called MUSQ, spelled MUSQ. This was a very, very, very interesting conversation, Eric, and an area that we have never covered on this show.
Yeah, absolutely.
And what made it, I think, so interesting is that, David's whole perspective is that we're entering the golden age for music. And, when you look at all of the reports and the prognostications for music and for its growth, especially from some of the other shows that we've done, as well as what David said, the expansion on a worldwide level, we can see a lot of growth, but also for other reasons as well, which we'll get into.
Yeah, and I also wanted to say, and we're probably going to say this a million times during this episode, please, we're not giving out financial advice. Please seek out, the services of an actual financial investor that can really help you, that can give you proper advice on this. But yeah, one of the things that I really loved about this was how he was talking about his music as an investment. Music is a long-term investment that is generally uncorrelated with other markets, making it a good hedge against inflation. So, for people that are out there that are stock market investors, this could be the opportunity to kind of diversify your portfolio more. And for people like us that are on this show that may not be investing in a lot of stuff in the stock market, this may be another area that you need to think about for, growing your financial portfolio. And not only that, but just thinking about investing into other assets like music and copyrights and things of that nature, which are going to become more of the commonplace for artists to raise money for their projects.
Yeah, I couldn't agree more, Eric. I think that's absolutely true. And again, we come back to another thing that he said that other people have touched on. I think Roland also touched on this as well, which is really fascinating, is that his whole fund, the ETF is priced around $23, $24. And when buyers purchase shares, they're investing in a diverse range of company securities. But the bottom line is that this is something that allows a much, much wider and diverse group of investors, which really serves artists where they don't have to rely just on 1, 2, or 3 people like a major label or one source, an independent label, whatever it is,
right,
for their funding, that there is a real chance. It's kind of like building a fan base,
right,
but building a financial fan base. And that's what I thought was so exciting about what he was talking about, because the ETF allows for that. The whole game of what he's doing allows
Well,
for that
you
within
have a
those
bunch
sectors.
of companies that's under an umbrella. It's kind of like when you're investing in the stock market. You have these ETFs that are very
Right.
common that have like Tesla and have Google and have Apple, and those are all part of that particular group of companies that are represented in that ETF. Same concept here, but you may have like a Live Nation, a Spotify, Apple Music, and those companies of that nature that are part of this ETF, which I think he gets into that in the episode.
He sure does.
Yeah, and I also thought one of the other areas, again, not giving financial advice, but was the educational content. He quotes that, we offer a wealth of resources on our website, including a comprehensive 100-page white paper and various investment case studies. And additionally, that he actively shares valuable content on social media to educate potential investors. So,
Yeah.
He's out there doing the work and preaching to people on, how important this new area of investing is. And so I think it's going to be an exciting time for what he's doing with music.
Oh, I couldn't agree more. I think this is a very, very exciting time. And I think the idea of being able to invest and the idea of more people being involved in music from a financial level is nothing but healthy.
Insiders, sit back, relax, and enjoy our featured conversation with David Schulhof.
Hey, David, how are you?
Great to talk to you guys.
Great to talk to you. You have a really extensive background in music and in finance, and your latest venture combines both of these. And I'm wondering if you could tell us about it and how you came up with the idea for it.
Sure. So about 2 years ago, I was going to launch another music publishing company. And as you know, I've launched several, including Evergreen, which I sold to KKR. And I looked around, and there were honestly so many private equity-backed companies, I really had no competitive edge. And I decided to take a step back and I looked and I realized that there were so many exciting public music companies, but there was no convenient, diversified retail way for investors to get exposure. Historically, investors had to be an LP at Blackstone or KKR. So I wanted to make something really easy, all the way from retail investors to pension funds and to family office. So through that process, MUSQ was born as the first pure play music exchange traded fund.
Okay. Is that the correct pronunciation of it, MUSQ, or do you just say music?
People say music. It's the MUSQ is the ticker.
Right, is the ticker symbol. Right.
So it's really referred to as the music ETF. That's what we are.
Okay, great. Got it.
David, it's Eric. So glad to have you on the show. Really excited to talk to you about this new venture. I wanted to ask you, what are the most significant revenue models that the music ETF focuses on?
So there are really 5 different buckets. You have streaming, you have content and distribution, you have live music events and ticketing, you have equipment and technology, and you have satellite and radio. We have approximately 40 holdings in the fund. About half of them are domestic equities, and the other half are foreign equities in countries ranging from Taiwan to China, across Western Europe, and South Korea.
How do you determine you've mentioned several here in this conversation so far, the main 5. How do you determine which segments of the global, music industry to prioritize your investments in? Why those 5?
So the investable universe are all global public music companies, which include music royalty trusts or music closed-end funds that trade on a major exchange, and they generate at least 50% of their revenues from music, or they're a top 5 player in streaming or live music or equipment and tech and satellite and radio. Nope, all the companies are market cap weighted. No single company can have a weight of more than 5%, and no company can have a market cap less than $100 million. And they have to have average daily trading liquidity of $500,000 a day. That creates a nice cross-section of small cap, mid cap, and large cap companies in those 5 different buckets.
And I wanted to ask you, this is something that obviously anybody who's investing would be asking, I would assume, what are the primary risks that are associated with investing in the music industry, and how do you manage them in today's radically changing landscape?
Well, I think the biggest risk today, if there is a risk, it's really AI. And every industry is facing AI as a potential risk, but we view the benefits of AI, which far exceed any risks. So, look, you want to highlight what the risks are. You have market saturation and you have piracy.
Right.
So you see all the deep fakes from all the music, weekends, the fake trades. just yesterday, somebody in South Carolina was arrested for creating, 200,000 fake content farmers.
Right.
And they're illegally streaming revenue. In fact, the CEO of Boomi was even listed as a co-writer on it. So there's a lot of market saturation. There's a lot of fraud. Those are the obvious risks. But I feel like, that's gonna wind up fixing itself. You have, task forces now, run by Lucian Grange, by Robert Kinsel. You have two bills, one before the House and one before the Senate, the No Fakes Act and the No AI Fraud Act that Marsha Blackburn, introduced. So, look, the benefits far exceed the risks, which are obviously producers have access to stems. They can create new music. Copyright owner, you get derivative work. It's all about consent and compensation, though, right? We need to make sure that if AI is being utilized to create new music, whoever the copyright holder is has to consent to it, just like you would in a sample use. And to the extent that a derivative work has been created, that there's the right, compensation. Lastly, on this point, is that, historically, there's no federal copyright protection in your voice. That's really the problem. And AI has created a lot of deep fakes with voices.
Right.
You have the states now respond to, like the Elvis Act and so on. So those are the risks around the music industry. But outside of that, the industry is entering into a golden age. The music industry is doubling between now and 2030. If you read the Goldman Sachs report, music in the air, music's really undervalued. Music's really under-monetized, and we believe music represents a very compelling investment opportunity.
Yeah, it's interesting listening to you because you have been in this business for a very, very long time, as I have been. And, one of the main things in terms of the overarching element that we see is a decentralization. I mean, it used to be all about the big 6 major labels, then that's down to 3, or the big major publishing companies, Also, the other interesting thing in terms of what you do, publishing and recording, and they were very separate industries, and they're blended now. So many of them are blended, which I find fascinating. I mean, Hartwig Mausch, who was the chairman of BMG, said, one of the things when they formed the new BMG was that, it no longer took the cost of a house to make a recording. The great challenge was not money and size and market share, it was the ability to reach people and get their attention. So, it just seems like we're in an era where, so much of the possibility is going to be about more innovation, more of the kinds of opportunities like the business that you're doing. We never had that ability before unless you were like a blue chip player. Are you seeing more of this kind of investment, more of this kind of innovation within your own field in the business?
Look, absolutely. Look, you have so many companies today involved in recorded music and music publishing, and we have all these companies in our fund.
Mm-hmm.
And you're 100% right. It's a lot cheaper to create music and to distribute music. So clearly people can create, tons of, complete albums that sound beautiful in their own home today with the technology. And we have all those companies that deliver those tools, from Yamaha, Sonos to Roland. So, that's really one way now artists can create new music on their own. And then when you think about streaming and distribution, at the click of a button, you can appear on Spotify, on Apple, on Tencent, on YouTube, on Amazon. When you think about global paid streaming penetration, look, there are 8 billion people on the planet, 90%, 7.2 billion have a cell phone. There's only 700 million paid streaming subscribers, right? It's less than 10%.
Right.
So when you think about that number is really expected to explosively grow. Again, if you read the Goldman Sachs report, those numbers are going to 1.2 billion in the next 6 years.
Wow.
So we perceive massive growth around streaming, and all of this is having a benefit on all the record companies because 70% of all of the revenues that are generated by the streaming companies are paid out as total content costs to all the labels and all the publishers. So if you look every quarter, all the streaming companies are delivering, stellar revenues, and all the record companies are getting great revenues, because they're hitched, all the streaming companies.
Yeah, very, very much so. What's your thought on the streaming battle between, Spotify wanting to lower their rates, or do you believe that the 70% payout will continue in streaming services?
Well, first, if I heard you correctly, Spotify is actually raising rates, not reducing rates. Spotify, music's undervalued. Historically, Spotify never raised rates in 15 years since they launched.
Right.
Netflix raised their rates 5 times. Spotify raised their rates by $1, and that was serious. That was like meaningful revenue at 240 million paid subscribers. That's like $3 billion of incremental revenue by raising it $1.
Right.
And they did that, and they crushed earnings, and they did that a second time this past quarter. And they're going to continue to do that because music is half of what you pay for Netflix or Hulu or HBO Go. So we believe all the streaming companies are undervalued. Yesterday, Live One announced they were going to raise rates again. We think that, look, for $12 to have access to 200 million songs, we believe that should be closer to double, right? And there's no indication there would be any attrition because people actually have more than one service. They actually have 2 or 3. And so, and then you wind up paying quadruple that because if you want Disney, you pay for Disney. You have to go to Hulu. You have to go to HBO. So that's a really big investment case is that, streaming subscriptions are going to grow from existing subscribers and from new subscribers. And we're expecting, and if you look at streaming, if you read the Luminary or the IFPI report or the RIAA report, streaming is growing at 10 to 15% right now, 4 or 5 times the GDP. That's in the U.S. It's growing 25 to 30 times in the emerging markets. So when you add in that kind of growth with ongoing price hikes, that represents very compelling investment opportunity. And just look at Spotify alone. That stock is up 80% for the year. It's up 150% for the last 12 months. And, it's one of our top holdings.
Yeah, I was going to say, I'm from the different mindset. I believe that these streaming services, because, when you think about it, people were cutting the cord because they were trying to get away from the $150 a month that Spectrum or, Comcast or any of these companies would pay for. And we're running into the same problem now where you've got, Peacock, Disney, Max. I mean, you've got 45 different services now. And if you start adding that all up, you're back to the same old dance with cable, which was the original reason why people were cutting the cord. I believe that it's going to get to an apex where this is going to come crashing and you're going to start seeing, this is my view on this, of course, that you're going to start seeing companies that are going to start bowing out of the streaming game because there's just too many platforms and it's just not enough money to go around. What are your thoughts on that?
No, look, I agree with you. Yeah, it is looking like cable used to be, and you have to subscribe to everything. Music is just one.
Right.
All you need to do is you get access to 200 million songs, so it's cheaper and it's more consolidated. So, we know people are willing to pay 3-4 times that to have multiple streaming services. So why shouldn't they pay more? Music is funny, right? When you go back 100 years since Thomas Edison, invented the phonograph, people have expected music to be free. Right? Because it started off on radio. They just heard it. They didn't pay for it. There was no, point of purchase. And music is finally catching up. And if you read, and JP Morgan, that's why they call music the best content story in the history of the business. And you can read all the reports from Lisa Yang, top analyst at Goldman Sachs, why music is entering into a golden age right now, or you read all these other reports, Luminate, RIAA, to the IFPI, they are all pointing to the same thing. So this fund really captures all that growth and all that innovation by having all these different streaming companies and content companies in the fund, along with all the other verticals I mentioned.
David, I want to ask you something. Going back to what you had said regarding the fund and where it's at, you're in both the U.S. and international markets. And I'm curious, how do you address the challenges of different regulatory environments and market conditions across, regions such as Europe, China, Japan, Asia? How do you deal with that?
Right. It's a really great question. So that's what makes this such a unique and easy and convenient fund. If you wanted to go and trade ADRs on companies in our fund in China or in South Korea, or you wanted to go buy like him in Taiwan, or any of the Japanese companies like AVEX, or a MUSQ or Stream Media Corporation, you'd have to open up a local account there. It would cost you some money to set it up. There's some regulatory issues around it. We have sidestepped all of that. We've created a really easy way to get exposure to all these companies just by buying the ETF. Because I realized a lot of investors wanted exposure to these companies, but they didn't know that there were so many. Second, they don't really have the bandwidth to go and set up accounts, and it's kind of a headache for their broker to do. So that's what the benefit of this exchange traded fund is that you get exposure to all the big names in the U.S. that you're familiar with, like Universal, Warner, right, and Sphere and Madison Square Garden and so on. But you have all these really exciting, companies in Japan and Germany and Taiwan, and I think we have 8 or 10 of the South Korean big K-pop companies. And so we just make it easy so you don't have to do all that.
Really quickly, and I know you touched on this before at the top of the show. What were your thoughts, or what are your thoughts at this time from an investment perspective? You touched on it a little bit, but regarding AI in the music space, you brought up 2 significant points. One about copywriting the person's voice. How do you see that happening? And also the other part of that question is, right now we cannot copyright something that you create in AI. So how do you think that that's going to change the landscape in terms of what you're doing?
Yeah. So as I said before, I think the benefits of AI far exceed any of the risks. I think, the guardrails around AI are still working out. These 2 bills, the House and the Senate, I think they're very likely to get passed. You have all the states that are now passing laws giving copyright protection, in your voice. And you have, and they're fierce right now about cracking down on piracy, like you just saw yesterday, right? And so I think all this is gonna work out. Every 10, 15 years, always something that disrupts the music industry. If you go back 100 years, right? And here AI, remember, it's been almost now 30 years since Napster, or 20 years, 25 years since Napster was first created. It's now 20 years since Spotify was created. So we are ripe for something new and something different. And I believe that, there's going to be a lot of great creation with music. I think even though people are using AI tools, I still think they have the ability to copyright what they're creating. I think there are clearly some issues around how original is it. And so, but, look, those things are going to get worked out. The reality is more music is getting created. It's easier to get it created, and it's sampling existing works. And as long as we have consent and compensation, so we're compensating the estate and we're compensating the copyright owners if they're sampling anything. We have to make sure that the authors are getting paid. We cannot live in a world where this is happening where they're not getting paid. So assuming that there's enforcement around that, I think it's a great thing for the industry.
It is a great thing for the industry. It makes me wonder. I mean, and I've spoken to a few attorneys about this, and I'd love to get your perspective on it. Is that I was asking, coming up in the music business, you never ever saw people doing the kinds of deals that have been done recently, like with Paul Simon or Neil Young or Springsteen or Dylan or any of these people selling all of their rights, Queen, everybody. In a way, I mean, they were always passed down to the estate, passed down to and now you're not seeing that. And one of the things that one of these major attorneys told me is he said, sometimes it's a financial consideration because they want to enjoy the money now. But one of them said an interesting thing. He said, nobody knows where the role of copyright and the value of copyrights is going to be in 15, 20 years. No one knows that right now. And so therefore, this opportunity and market condition to sell everything at top dollar becomes very attractive. What are your thoughts on it, especially in light of what you just said regarding the whole thing with AI and being compensated and the ability to, make music so easily now? Is there going to be a fundamental shift in the value of copyright in the new era over the next 20 years in your mind?
Yeah. So first, look, a lot of these catalogs got sold at record high price, solely because of cheap interest rates. So we know that, and there were favorable capital gains treatment. But look, in terms of U.S. copyright, look, after defense and aviation, I think U.S. copyright is the second biggest export of this country.
Yes,
right. So,
always has.
We are fiercely protecting whether they're Disney characters or movies or TV shows. So the U.S. Copyright Office, it is a crime. It is a fierce crime, as you know, right? Punishable by compensatory damages. You have criminal damages. You have treble damages. You have all kinds of damages, and it's a criminal offense to steal, right? So I have to believe that U.S. copyright is not going away, and that everything is being done to protect copyright holders. I don't think there was really a gold rush to sell because people thought, hey, 10 years from now, there's going to be no more music. I mean, they said that 30 years ago. That was the biggest thing that happened right when Napster got created. Everybody started ripping files from CDs. Everyone thought the genie was out of the bottle, and the industry did decline. But if you look, it was a the recorded industry was a $20 billion business at its peak in 2000, right? And then it dropped significantly when Napster came out. And then today, the recorded business is at a $50 billion business, more than double where it was. So if you look at the chart, it dipped and then it came back out. So I think, look, we could see a dip around AI. There could be leakage on the recorded music side, but we're not seeing any of that right now. As I said, if you look at, again, I love going back to their reports because they're so thoughtful and accurate. Look, we have the music industry today is basically doubling between where we are today in 2023 or 2024 to 2030, okay, across recorded music, across music publishing. We haven't even talked about live music. Live music is growing 25% every year. So the industry, we're roughly at $100 billion today. It's going to be, again, according to Goldman Sachs, it's going to be over $171 billion in the next 6 years. So there's no indication that AI is going to impact this, and there's no indication that we're going to see anything like we saw 30 years ago when Napster was introduced and the genie left the box.
I want to ask you something about your own business, which is, how do you stay abreast, or your company stay abreast of the market in identifying the most attractive investment opportunities within the global music industry today? I mean, given that, there's so many things that are emerging and happening, what are the sources, or how do you do that?
Yeah. So look, I read a lot. I read every day. I read all the reports, talk to a lot of analysts as well who are aware of new companies that are, whether they're coming onto the market through a SPAC or a reverse SPAC. And I'm aware of all the international companies too. So, we keep very close look at all the new companies that are coming public. And if they we scrape the universe, all music companies every week. And if there's something that comes in, our fund gets rebalanced quarterly, by the way. So on the third Thursday of every quarter, there would be a rebalance. And so what happens is if a company gets too big, right, it gets reduced its weight back to 5%. The Apple, Amazon, and Google in our fund, because after Spotify and Tencent, they're the third, fourth, and fifth largest streaming company in the world, but they can't be more than 5%. And if there's a company that drops below $100 million, then they also get removed from the fund when it gets rebalanced. And then we look at all those companies, that may have become eligible. And so if you actually look in our fund past rebalance, we actually added Co-Holding, which owns Hot 97 and WBLS. That was a new company that just became eligible. And we also added another K-pop company called Dreamist Company. And we lost one or two companies because they dropped in market cap. So for the most part, all the companies in the fund remain the same. Their weights may differ. And every quarter, I would say anywhere from 2 to 3 companies go off and maybe 1 to 3 companies come on.
David, I wanted to ask you, are there any key trends emerging in the music space beyond AI that you foresee shaping the music industry today or in the future?
Yeah, look, AI is certainly, the one that, is kind of driving a lot of technology. Suno is a really interesting company, kind of in the AI space. Look, I think blockchain is something really interesting, has a potential for some point placing the performing rights society. Think about this, honestly, ASCAP, BMI, and CSAC, they're all pretty outdated right now.
Yeah.
They're collecting royalties and they're hanging on to that money for 9 months, right before they pay it out to the authors. In a perfect universe, there should be a direct payment rail, one pay for one play.
And you see that blockchain happening?
Seeing new companies that are utilizing blockchain to create instant payments for artists and for writers. And so eventually you want to work with those companies instead of signing up to ASCAP, BMI, or CSAC.
Interesting.
Yeah, exactly. That's the interesting thing about blockchain is that it like AI, it permeates over so many areas of our culture, so many areas of commerce, not just in terms of like what you were talking about, the performing rights societies, but in so many ways of just, exchanging, information or selling something or following something. That's what I think makes it so interesting as a conversation.
Look, it's about digitization and transparency.
Mm-hmm.
That's where I think music is really going, right? Music is it's growing through the digitization of music by being able to enter into these markets, through different streaming services and cell phone carriers. And the technology now is there to provide total and complete transparency. So an artist should know how many times their song streamed, what their royalty rate is, and they should get paid. There's no reason. Look, truthfully, the societies have been hanging on to all this money because they've been collecting
interest, right? Yeah.
Right. And so that's not any secret, but at some point they're going to get disrupted by some of these new companies that I've seen that are creating greater transparency. And now, look, artists are directly in touch with their super fans too. Ultimately, there's a place where I've seen a lot of that. I've seen new ticketing, ideas and around where artists can communicate directly with their fans to sell tickets. So, again, the industry for a long time, it's been very antiquated. It's been very opaque. You're sent statements. You don't know what they mean. You send them to your lawyers for translation. Like, that has to change. It is changing. And I think Cobalt was one of the first companies to really push that forward.
They were. No, they absolutely were. Willard was one of those people who he led that company into the 21st century in that particular regard.
Amazing job. Look, he's a close friend, and I was one of his biggest clients when I had Evergreen. I saw that right away. He did all of our administration outside of North America.
And I think the other thing, one of the things what makes that kind of transparency so important is the fact that so many independent companies and independent artists today are controlling their own destinies. They're not, it's not we don't live in a world where 90% of music out there is controlled by the 6 major labels, like it was in the 80s or 90s. That era is gone. And we're seeing a complete shift over time to a much wider and greater diversity of companies and rights holders and so forth. And, especially to your point about what you were saying about the disruption of, how so many of these companies are antiquated. And certainly the major labels, I think, which also include the major publishers. I mean, the Sonys and the Warner Chappells and the Universals, they're all part of the major label system. So,
yeah, look, I certainly I'm seeing a lot of, DIY services, artists being able to, stream music themselves, do direct deals. And I think you're right. I think you're seeing a lot more independent artists like on Spotify. I mean, if you look, like, honestly, Universal, I think, miscalculated how much revenue they were expecting from Spotify last quarter.
Right.
Which is why the stock is considerably, I think it's no longer just major label music. It's now independent music, and it's also a lot of podcasts and books. And so these streaming services are more than just, major label repertoire now.
Exactly. David, I wanted to ask you, how can our listeners who are listening to this and listening to you talk about your company, how can they get involved in terms of investment or learn more about this kind of an investment opportunity with you?
Well, they can get involved as simply as opening up their Robinhood app or E-Trade app and just typing in MUSQ. That's the ticker for our fund, and they can buy shares.
Beautiful.
Right there. And unlike a mutual fund, each ETFs trade just like stocks. You can buy it and sell it in the same day. It's completely liquid. So if they bought, look, the NAV today, the net asset value price is around $23 or $24. I'm making this up. If they bought 1,000 shares for $24,000, we would turn around and buy all the companies we just talked about, and all their shares in the fund would be backed by those securities, and it would track the performance of all these different companies. And they're free to sell it whenever they wanted to. If they felt like Christmas was a good time to own it because, more repertoire is coming around Christmas, that's a good time to buy. They could buy it, and then they could hang on and they could sell it a few months later. If they think summers are a good time to own music because, you have the Eras Tour and the Renaissance Tour, we have all those companies, Live Nation, the Sphere, the Madison Square Garden, the Vivid Seats, CCS, Eventum, the big German company. They can buy it and then they can sell it. We believe, though, music is a long-term investment. We believe that music is, too big to ignore. It's uncorrelated to the rest of the market. So when the markets are volatile, MUSQ is actually up the last couple of days, when NVIDIA is down 15, 20%.
Right.
So this is a hedge against inflation, uncorrelated to the rest of the market. And so they can easily just call their broker or do it themselves and just buy shares just like a stock. And then, look, they can go to our website at MUSQETF.com. They could look at I wrote a 100-page white paper there on what we're doing, but there's also the investment case and there's management presentation. And then they can follow me on LinkedIn, on Twitter, on Instagram, on Facebook. We're posting every single day. If there's something important about the industry, I'm personally writing about it. We have tons of content every day. And you can just go to our website. I've done, I do a lot of TV interviews. I go on TV all the time. I do a lot of podcasts. Like you guys were nice to reach out to me to have me on as a guest today. So I do things like this to educate. But people just love music. And I think this is a great way to invest now in the industry when historically people really didn't know how to do it. This is a very diversified way to do it. It's a very safe way to do it, right? You have all these different companies in the fund that are in the trillions of dollars. You're not investing in your friend's record company. You're not investing in your friend's music publishing company. I'm not saying those investments would go bad, but those are risky investments, right? There's really nothing risky about investing in an exchange-traded fund when we have 40 securities, Apple to Google, Spotify to Live Nation. These are massive companies delivering, great results, great earnings. I mean, like any stock, they can go up and they can go down, but we are very diversified across many of these buckets. And we think that as a long-term investment opportunity, this is a great way to get exposure to the global music industry.
David, throughout your career, are there any films or books, you kind of alluded to that earlier, that you have found to be particularly inspiring to you professionally you can share with our audience?
Look, I'm actually a songwriter. And so when I'm not doing this, I actually love practicing songwriting. So, I just read like Jeff Tweedy's book, How to Write One Song, which I love. I just read The Lyrics by Paul McCartney, who's, a master. I read, what else did I read this summer? I read Chris Blackwell's book, The Island.
Yeah.
I read Matthew McConaughey's book, Green Light, and I'm in the middle of reading Bill Maher's book, What This Comedian Said Shock You. So I like to read about pop culture. I like to read about artists and musicians, and I love biographies from, Richard Branson, Phil Knight. So, but I just love books around the music industry. I love all these icons that created these incredible businesses, and I love when they're writing about them, and you love hearing the story. It humanizes the whole thing. I love the story of somebody who came from nothing and built it up, just pure passion and commitment and a great idea. So I love those types of books.
Yeah, absolutely. I mean, as you were speaking about the biographies, have you ever seen the documentary, The House That Amit Built?
No, I actually never saw it. Now you gave me something to watch this week.
Yeah, you would love that. It's a 2-hour and 11-minute documentary on Atlantic Records. And it's the entire story from how he started it in 1947 right up until, a couple years, like literally it covers like his death, when he passed away backstage at a Rolling Stones concert. And it's really, for someone like you who's a student of the business and had been in it, you would really love it. I love the Blackwell book as well. I thought that was a really, really good one. And, and Clive's book and documentary and Richard Branson.
Clive called me. I financed Clive's documentary. I'm one of the executive producers.
We had him on the show. Yeah.
We did.
I listened to his interview. It was amazing. I mean, every time I listen to him, I'm just like more inspired to do what I'm doing. But I was the president of music at IM Global Films, and he had called me one day and said, David, can you come meet me? I met him at the Peninsula. He showed me a 5-minute teaser. We had a deal in a week. I gave him the financing. I said, Clive, we're going to do this with you. And 2 years later, we sold it to Apple. And, it was an amazing concert. And then today, it's like one of the top performing music documentaries on Netflix. But it was a really important part of that. And I was really proud that he had called me.
That's fantastic. Yeah. We were thrilled. I guess you listened to the interview, but we were really excited when we got that. We went to the hotel, the Beverly Hills Hotel, to do that with him a couple months back. So that was an exciting one. David, what advice would you have for someone who's wanting to get into the investment field today? As a professional and someone who works in that field, what advice would you have for them in today's market?
Look, I always suggest, if you're just starting out for investing, I think you have to open up an account and you have to start trading, and you have to understand how securities work. And it doesn't require a large amount, but I think you should have some exposure. Everybody should be investing in index funds
Yeah.
right? Because like it's similar to what we're doing with an ETF. An index fund is even broader, like the S&P or the triple Qs. Those are thousands of companies. You want to invest, in a diverse way. So I encourage people who are starting out, go buy investments in, the S&P or the Dow or the triple Qs, which is all technology. Don't do singular bets. Don't bet on one company. I think that's super risky. I mean, maybe you're smart enough to pick up NVIDIA 2 years ago, but most people aren't. And by the time people learn about that, it's going to be too late. But invest in index funds or invest in exchange-traded funds, which trade just like stocks. And so that's what I tell people. I think that's how they get started, and they should just follow the news on those funds. And look, over time, and you can, listen to Charlie Munger, you can listen to Warren Buffett. There is no better investment in this country than in the stock market. If you go back 200 years, okay, outperformed every other industry. And the smartest minds will tell you that. You just need to be in it for the long term. You can't have a short-term mindset around investing in the stock market because a lot of it's, volatile. A lot of it has to do with, rates of inflation and whether interest rates are higher or low, or is it too expensive for companies to borrow money. So there are certainly impacts around that. But if you have a long-term view, there is no better way to make money over the long term than investing in equity.
David, we cannot thank you enough. We really, really appreciate this. We really appreciate you coming on and sharing your insight and knowledge of this really fascinating field that's, very, very relevant to today.
No, thank you guys. Thanks for having me on the show. I just think I'm so excited because it's a great way for individuals of all ages to get exposure now to the music industry. Not only sophisticated guys like yourself or family offices, but retail investors, right? People who are starting out. Kids. I had a call recently with a big investor in Boston. He said, "You mind if I bring my 11-year-old son onto the call?" He heard what I was looking at, and he could relate to companies like Spotify and Live Nation. And what a great way to educate kind of the next generation of kids who are to learn about investing. So it's a fun theme, exciting theme, and so I'm really proud that it's out there. And thanks a lot, guys, for having me, on your podcast today to share my experience and talk about it.
Thank you so much, David. We really, really appreciate it.
Thank you.
Wow. I knew this would be an interesting conversation with David. David's been involved in music publishing for a long, long time. And he comes from an entertainment family. His father was Mickey Schulhof, who was the chairman of the Sony Sony Corporation, the whole worldwide entity, for many, many years. And, so many interesting things, Eric, in this particular one. One of the more fascinating aspects that he talked about was how, the emerging technologies in the industry, including AI and blockchain, which I thought was really fascinating. Blockchain in particular, he felt holds the potential for replacing traditional performing rights societies by offering direct payment solutions rather than groups. So, there you're talking about innovative things that affect writers on a day-to-day basis with regards to their songs. So that was a very interesting point to me.
Yeah, I also thought sticking with the AI thing was, which what he talked about was AI in music. Despite the risk, AI's benefits with emerging regulations to safeguard creators outweighing the disadvantages. And, we've talked about all the laws that are going into effect. Nashville, that was big in passing that recent law, I think with Elvis Presley. I forget what they called that act.
The Elvis Presley act.
Right. And so, this is an area where, the risk are worth the reward because there's more, I think, advantages to what AI can offer than the disadvantages. So it's just real interesting to see his take on that subject.
Yeah, absolutely. And I think, look, I'm not of the belief that we should just have this go unregulated. I think AI does need to be regulated. Right. I think the people who have created a lot of this AI have testified before Congress. They feel it needs to be regulated, and it does. Right. And part of that is, humankind. There's too many bad actors who would take advantage and so forth. And what we got to remember, When we have these discussions, Eric, we discuss it as far as AI concerns the music business. But what we don't understand is how AI as a technology is going to affect every single aspect of life, medically, culturally, scientifically, musically,
politically,
movie-wise, culturally-wise. I mean, all of it. So, it's a much bigger conversation than just how is it going to affect, songwriting or lyric writing. So that's another aspect. The other thing that I thought was really interesting in his conversation from that perspective was how he talked about the decline of the monopoly of the major labels and the publishers with the rise of independent artists. I've been seeing that for years now, just, looking at the market, how that whole dynamic is slowly shifting.
Yep.
And you're seeing more and more independent artists who, because of technology, are finding a way to connect with their fan base. And we've talked about this many times. Artists that, are not on People magazine or are not on the cover of Rolling Stone or whatever, whose names we don't know,
right,
but who are making very, very good livings. And that's the point he was making here about that demise. So, the major labels, and we've talked about this before on other shows, are seeing that, their power is
diminishing slowly.
Is diminishing.
You can't write a check to push something now.
It doesn't work anymore.
Right.
This is the great thing. It's, I'm fond of always saying to my students, the most important component in marketing music today is not power or the size of your company or market share or money. It's more fundamental than that. It's the ability to get people's attention, because attention can't be bought anymore. Just like you said,
right.
It's not a thing of writing a check. We used to be able to do that. How big do I need to make the check? And we knew.
Because there was gatekeepers that were controlling all of that.
All of that.
Right.
And we knew what we would get back as a result of that spend. We don't live in that era anymore.
Right.
And this is kind of the proof of that.
One of the other areas, Ritch, what I thought was interesting that he was discussing, and I guess it's his background in music publishing, was the idea of copyright and compensation. Ensuring proper compensation and consent for sampling is vital in protecting authors' rights and maintaining fair payment practices. This is an area, I guess, where he was talking a little bit of what you talked about with blockchain, where maybe circumventing going through the PROs, and maybe you just get paid directly through blockchain, and it doesn't take you 2 years on the back end to get that, influx of revenue coming in. And so I think that that's a unique point that he talks about, and it's going back more to your point about the whole idea of the major label systems are that they're kind of diminishing in power, and there's less of roadblocks and less red tape happening.
Yeah, no, I couldn't agree more. There is, and new systems, more important than the roadblocks coming down, it's the idea that we're in an era where new roads are being built, not roadblocks.
Hey, insiders, thanks so much for tuning into this episode. We really appreciate it. To get show notes, links, and everything that was mentioned during this interview, head on over to our official website at MUBUTV.com/podcast/show notes. If you're enjoying the content and what we're doing here on the show, please subscribe to the podcast on Apple Podcasts, Spotify, or wherever you listen to podcasts from. And don't forget to rate and review our show at iTunes. 5-star reviews are always welcome and help to ensure that our podcast stands out on the top-rated and new and noteworthy charts on iTunes and our space. You can also find us at social media at Facebook, Instagram, TikTok, and Twitter X, all ending with the handle MUBUTV, which is spelled MUBUTV. Don't forget to catch our flagship show, the MUBUTV Music Business Insider video series, airing every week on YouTube at youtube.com/MUBUTV. This show was produced and created by Ritch, Esra, and Eric Knight. Theme music by Disciples of Babylon, and be sure to tune in next week for another episode of the MUBUTV Music Business Insider Podcast.